Hello guys, welcome to a new video, and we all know that tax season is here and you should be prepared for that. If you are using Robinhood, don't forget whatever gains that you have made in this year, you have to pay taxes on that, and that is not good, right? But knowing how much you have to pay and how much you exactly owe to IRS, or maybe you're gonna get something back from them, or how you can use, if you have made losses in this year, how you can use those losses to offset your gains and make profit out of that. That's the knowledge you should have, and this video is all about that. So without any further ado, let's dig in. Before going any further, I first want to cover the capital gain and capital loss. What exactly we call capital gain and capital loss. So capital gain, right? Let's take an example of Apple stock. Let's say you buy $1,000 of Apple stock and then you sell it for $1,000 profit, right? $2,000 by end of the year. So that $1,000, because you've sold the stock, that $1,000 is gonna be your capital gain. Okay, let's say the opposite, right? If you sell that stock before the year end for a loss, let's say you buy for $1,000 and you made a $500 loss, you sold it for $500, that $500 is gonna be your capital loss. So I hope you understand, right? Until you sell something, that is called unrealized gain and unrealized loss, right? So the moment you sell something, that becomes your realized gain, and that is also called as a capital gain, right, from the stock. So once that is clear, we can now move on to the next part. Okay, next thing is should also know what is a short-term gain and a long-term gain, right? Because the taxes are different if you have done a short-term capital gain versus a long-term capital gain, right? So the short-term capital gain is something that you buy and sell within the year. So if you buy something, let's say in January, and you sold some the same stock in by December 31st, that is called as a short-term capital gain, and that is tax higher than your long-term. Long-term is anything that you hold for more than a year. So if you buy something, let's say in January of this year, and then you sold it January of the next year, right? So that is more than a year, then that goes under the long-term taxes, and that's a lot of people use that because you should, if you are planning to sell something by end of the year, then just hold it for some time so that you can sell it once that 1 year completes, so that it goes in that long-term capital gain bracket, right? So that's the idea behind short-term and long-term. Now, how much you have to pay, right? That is a good question to ask. How much you owe to IRS, and that completely depends on your tax bracket, where you land in your tax bracket, right? This is a chart for last year, right? So if you are in that 94,000 to 200 plus bracket, then you are subjected to the 22% taxes, right? So that's the chart. You can find the latest one in the IRS site, but this is what is the I have gathered from the IRS site for this year. So look at for that 2025 brackets, and that's how you gonna get your where you land in your tax bracket. Again, it is not like exactly that you pay that 22%. It's by the slab. So your first let's say below 90,000, it's gonna be calculated differently than whatever difference you are left with after that 90,000, right? So those are the nuances of this tax bracket. Want me to make a separate video of how the tax exactly is calculated? Do let me know and I'll make that video for you. Now, this is a very important and interesting concept of how to use capital losses, right? How you can use that capital loss to your advantage. So let's say, going back to my previous statement, right? Let's say you made around $1,000 of capital loss in this year, right? How you can use that? So first thing is those capital losses that you made, that first gets offset with your gains. So let's say you had $1,000 capital gain and $1,000 capital loss, that's gonna be even out. So that will be zero gain for your year, and you don't owe anything to IRS because your capital loss gets offset with your capital gain. So for that year, if you did $1,000 profit and $1,000 loss, you're gonna be at zero. But let's say you made $1,000 and you lost $2,000, right? So that is $1,000 capital loss on top of your gain. So those $1,000 also, remember, you can use that $1,000 to offset your ordinary income. And by ordinary income, any other income that you got from other sources from your, it could be from your employer, your other side hustle, or any other income that you have. These $1,000 capital loss you can offset against that, and that limit is up to $3,000. So up to $3,000 capital loss you can offset outside of your gains, right, to any other ordinary income. And let's say you have lost more than $3,000 in this year. Let's say you made, let's say, $5,000 loss in this year, then those 3,000 you can definitely offset for this year, but that remaining 2,000 you can also do for next year, and there is no limit or how many years you can offset your losses. Let's say you had a big loss this year of, say, $20,000, right? So those $3,000 you can keep offsetting for a number of years to make advantage of that, to basically offset your gains for the subsequent years. Okay, if all these calculations sounds complicated, it definitely is, but how do you calculate all these, right, you may ask. So you do not have to worry about that at all. Robinhood keeps track of what you do throughout the year, whatever options or any stocks, anything that you do in your account. Robinhood keeps track of everything, and by the end of the year they will send you a form which is 1099 that you're gonna get in your email, as well as you actually get a notification in your email, and you can go and download that 1099 from your account, and that's gonna tell you how much you actually made or lost that year with all the trading that you did. So don't worry about calculating all this, you're gonna get that form. The timeline of that form is by Jan 31st, I believe they calculate everything, and by mid of Feb you're gonna get that. Okay, the last thing is where exactly you see that in Robinhood. So if you go to your account section and then go to the tax center, that's where you will see the tax documents, and it shows you the timeline as well. So right now the Feb 18th is when they're gonna release, and here when you come and you can select this for this current year. Right now it's not available, but once it becomes available you're gonna get a notification. Like you see for 2023, these are my forms that I received. Similar way, once after Feb 18th you're gonna see the tax year form for this year, right, which you're gonna use it for your tax returns. So that was it, guys, for this video. I hope you found some value out of this video. If you have any questions related to the taxes in general or Robinhood platform, how they calculate the taxes, do put your questions. I'm not a licensed tax advisor, so I should mention that, but I do have knowledge on this area by doing all these Robinhood profit losses. I have been doing it for a long time. I know how this calculation is done. So if you have any questions, do let me know and I'll respond to that. Happy investing. Bye bye.